The cons to dividend investing. Like and subscribe if you enjoy. 1. Twice the tax. When you invest in dividend stocks, you are technically paying for two kinds of tax. The first is the tax that the corporation you invested in has to pay. Whenever a corporation has a certain amount of earnings, they have to pay tax on it as if it were income tax. This means that a part of their profits are going towards tax and less is going towards the shareholders. The second kind of tax is the tax that shareholders have to pay whenever they receive the payment. These two kinds of tax may be taxed at different rates than others, but they are still taxes that have to be paid. Many people aren't affected by the double tax on dividend payouts. However, if you were making a lot of money through dividend payouts, then it could be a problem or get quite annoying. Imagine you go to work and get a paycheck for the last couple of weeks of work. You go home and you give your kids money for doing chores and some work around the house. One day, the IRS or whatever tax system you have in your country shows up to your door to collect tax on the money that your kids made. That would feel quite annoying, right? Well, this is how people feel about the double tax. They say we've already been taxed once, so why do we need to get taxed again? 2. Uncertain dividend payout. Rates of dividend payouts change depending if the earnings of the company are at a reasonable level or not. If the company does not have good earnings for a certain year or quarter, they will either suspend the dividend payouts altogether or change them to a lower level than the previous years. If the earnings are higher than the year before and they have paid for everything they needed to pay for, then they could raise the dividend payouts. If the company has to change the dividend payout to a lower rate, then the performance of the stock will go down. A large part of investors putting their money into dividend stocks is because they are getting passive income. Why would an investor stay with a company that is giving them worse payouts than another? Quick reactions and turnarounds by a company make investors worried. As we know, if the investors are scared, then they will sell. This happens a lot with dividend stocks, especially if the company is going through tough times. 3. High dividend payout risk. What I mean by a high payout is 5 to 7% dividend yield. If a stock has high dividend payout, then there may be something wrong or risky about the company. Perhaps it has low growth, or maybe it's not worth what the company is actually telling you and they're trying to cover it up with big payouts. Many companies will have high dividend payouts, so investors will invest based on how much they are getting each year instead of the risk in investing in the company. The high yield may not be sustainable. If the company is doing really well, when they announce the high dividend payout, they won't be thinking about how that may affect them when times get difficult. If there is a problem with the company, maybe they have lower earnings for 1 year or quarter, or perhaps they lose a client, they will need to spend more money that they would have been using otherwise to give to their investors. This will either suspend or lower the dividend payouts. Investing in dividend payouts has a large time and investment capital. To make dividend yields have high returns, you need to invest hundreds of thousands of dollars. Even if you invest in dividend stocks that have 5 to 7% dividend yields, you will still need to invest hundreds of thousands of dollars. Time. You won't be making hundreds of thousands of dollars a year unless you are a millionaire who has a lot of money to spare. It will take you a decade, maybe even 2, to invest enough money into a diversified portfolio with high and low dividend yields to make sure that you can make a large return each year. Remember that you shouldn't invest solely into dividend stocks. They have pros and cons to them. However, no matter how good the pros are or how bad the cons are, you need to understand that anything can happen with stocks. Thanks for watching. Like and subscribe if you enjoyed, and I'll see you next time.